The federal government has sought the technical support of the International Monetary Fund to design a transparent fuel price modulation framework that will cushion domestic price shock and strengthen Nigerian fiscal stability. Permanent Secretary, Ministry of Petroleum Resources, Dr. Emeka Vitalis Obi disclosed these in Abuja during a joint engagement between the ministry, its regulatory agencies, the Nigerian Upstream Petroleum Regulatory Commission, and the Nigerian Midstream and Downstream Petroleum Regulatory Authority, and the IMF Fiscal Affairs Department Technical Assistance Mission on Climate Policy. Welcome to Business Point, where we extract the Nigerian economy and the government policies. I am Kike Lomo Okeri. Dr. Obi says the collaboration is part of the ongoing effort to build a resilient and transparent fiscal system capable of withstanding global energy market volatility while maintaining economic discipline. He noted that the federal government is seeking the continued technical support of the IMF's Fiscal Affairs Department in designing a transparent and resilient price modulation mechanism that will help cushion domestic price shocks, insulate markets and extreme global volatility, and preserve fiscal discipline. It described the IMF mission as timely and strategic, aligning with the government's effort to consolidate post-pandemic recovery, manage climate-related fiscal pressure, and sustain ongoing energy reform. Dr. Obi reaffirmed that removing general fuel subsidy was a necessary step to restore fiscal stability and redirect public spending towards infrastructure, social welfare, and sustainable energy development. Highlighting Nigeria's environment responsibility, he cited the Nigerian gas flare commercialization program and emerging carbon credit framework as part of effort to end routine gas flaring, reduce methane emission, and promote gas utilization in power generation, fertilizer production, and compressed natural gas market. It says this initiative aligns with Nigeria's national determined contribution under the Paris Agreement and global ESG standards. Dr. Obi called for sustained IMF partnership, both technical and financial, to strengthen fiscal analytic, climate policy modeling, and carbon pricing readiness. Leader of the IMF technical team, Diego Mesa, commended the ministry for providing a detailed overview of Nigeria's energy and fiscal landscape, noting that the mission focused on fiscal reform, sustainable development, and climate policy, with emphasis on fossil fuel and carbon taxation. The Nigerian Insurance Commission has unveiled a comprehensive implementation strategy for the National Insurance Industry Reform Agenda 2025, according to NICOM. The strategy was launched at a high-level meeting held in Abuja, where the Commissioner for Insurance, Olusegun Omoseyin, inaugurated 3 core working groups to drive the execution of NIRA objectives across the insurance value chain. The NIRA 2025, signed into law in July, set out a holistic roadmap for regulatory reform, financial inclusion, digital transformation, and compulsory insurance enforcement. Speaking during the strategy session, Omoseyin reaffirmed NICOM's commitment to ensuring that the implementation phase of NIRA is inclusive, data-driven, and results-oriented. It says this marks the beginning of a coordinated journey towards achieving a stronger, more transparent, and technology-driven insurance industry. The NIRA 2025 is not just a regulatory document, it is a blueprint for building an insurance sector that protects lives, businesses, and investments across Nigeria. He added that the new working group will serve as engine of reform, ensuring that critical policy objectives are translated into measurable outcomes. The working group comprises the Compulsory Insurance Working Group, chaired by Shola Tinubu, with the mandate to strengthen the enforcement and adoption of all compulsory insurance scheme across the country, including motor, third-party builders, liability, group life, professional indemnity, and public building insurance. The digitization working group is led by Adetola Adegbaye and has the mandate to modernize the insurance regulatory ecosystem through innovative digital tools and platforms. And the third group is the Financial Inclusion Working Group, chaired by Dr. Yeside Oyetayo. This group has the mandate of deepening insurance penetration, particularly among undeserved and low-income populations. The commissioner commended stakeholders for their dedication and expressed confidence that the new implementation structure will fast-track industry-wide reform. Brent crude oil prices are expected to fall to an average of $60 per barrel in 2026. The World Bank has forecast as global supply continues to outstrip demand. The decline marks a continuation of a multi-year moderation in the energy price. In its latest report, the Commodity Market Outlook in chart, the lender predicted that global commodity price would fall by roughly 7% next year, and the fourth consecutive annual decline. The price are set to lead the downward trend, with a projected 10% drop in 2026, following a 12% fall in 2025. Downward pressure on oil price reflects subdued global economic activities, persistent trade tension, and policy uncertainty, and is compounded by ample oil supplies. The World Bank noted that Brent crude has already dropped 14% in the first 9 months of 2025 amid oversupply and weak demand, particularly from China. However, occasionally price spikes were recorded due to geopolitical events and U.S. sanctions on Russian oil. OPEC Plus has gradually increased production target throughout 2025, contributing to an approximately 3 million barrels per day year-on-year rise in global supply. The report also highlighted the natural gas price have experienced significant regional variation. U.S. benchmark price rose to 44% year-on-year in the third quarter of 2025 due to strong liquefied natural gas demand, while European price remained largely unchanged. Looking ahead, natural gas is expected to stabilize in the United States in 2027 after a moderate 11% increase in 2026, whereas European prices are projected to decline by 11% next year. The World Bank analysis points to broader risk influencing commodity markets, including geopolitical tension, extreme weather events, and shifts in global trade policy. Despite these uncertainties, energy markets are expected to remain oversupplied, keeping Brent crude price on a downward trajectory. Furthermore, the World Bank stated that metals and mineral prices are expected to remain broadly stable, while precious metals are projected to gain 5%, following a record investment-driven surge of more than 40% in 2025. Agricultural prices are anticipated to edge lower amid favorable supply conditions, with food price stabilizing and beverages price declining by 7% next year due to expanding output. The World Bank also warns that fertilizer prices, which have surged by 28% over the past years due to strong demand, trade restriction, and production shortfall, are expected to ease gradually in 2026, though remaining elevated compared with the 2015 to 2019 average. Nigerian excess crude accounts rose to 13% in 2 years, while the stabilization accounts more than tripled. An analysis of presentation made by Accountant General of the Federation to National Economic Council shows that the review covers 15 NEC meetings between June 15, 2023 and October 23, 2025. It is observed that the ECA slowly rose from $473,754.57 at the Council inaugural meeting under President Bola Ahmed Tinubu to $535,823.39 at the latest session, an increase of $62,068.82 over the same period. The stabilization account climbed from 26.63 billion naira to 87.67 billion naira, a gain of 61.03 billion naira and about 229%. The Development of Natural Resources Fund grew from 96.90 billion naira to 141.59 billion naira, a 46% increase. A month-on-month analysis reveals that the Stabilization Fund fell to 17.21 billion naira in April 2024 before recovering through 2025. Natural resources slide to 26.85 billion naira by November 2024 and then rebuilt steadily to 125.82 billion naira in September 2025 and 141.59 billion naira in October. The ECA, by contrast, was generally flat through the period and then picked up in the second half of 2025. The excess crude account is a sovereign buffer created in 2004 under the Obasanjo administration to save oil earning above the budget benchmark price for stabilization and investment. The stabilization account is a federation account set aside to cushion state and local governments against revenue shortfall and cash flow shocks, while the Development Natural Resources Fund is a dedicated pool for developing and diversifying Nigeria's natural resources base, including solid minerals, funding projects and policy programs approved by the Federation Allocation Accounts Committee and NEC. While the ECA grew by 13% under Tinubu's administration, the balance has largely remained a shadow of its former self. During the oil price boom of 2008 under President Umar Yar'Adua, the account exceeded $20 billion. However, it gradually eroded after successive withdrawals and price collapse in the decade that followed. The increase mirrored key policies direction by NEC during the period under review. In December 2023, for instance, the Council reconstituted ad hoc committee on crude theft and economic affairs. The committee was initially established under former President Muhammadu Buhari in August 2022 to combat crude oil theft and pipeline vandalism that had crippled national production and forced international oil companies to shut down key pipelines. When President Tinubu reconstituted the committee in December 2023, daily oil production had dropped to between 700,000 and 800,000 barrels per day, below the country's OPEC quota, resulting in major foreign exchange shortfall. Output recovered to about 1.7 million barrels per day in 2025. During the review period, the Council also endorsed the 617.7 million IDs program to support tech, job, and push for food security measures. Through 2025, NEC backed a sectoral reform in the power sector, and its 153rd meeting on October 23, 2025, approved a nationwide crackdown on gold smuggling while supporting a revamping of training schools for security agencies. Also, states drew a statutory transfer during a high inflation cycle, keeping pressure on Naira-dominated accounts, even as the reforms such as the removal of the fuel subsidy and the unification of the foreign exchange window aimed to restore macro stability. The NEC, a constitutional advisory body chaired by Vice President and comprising the 36 state governors, the Central Bank, governor, and the key ministers meet monthly to coordinate economic policy but often deliberate on broader governance challenges. The council meets on the third Thursday of the month. However, its sessions have been infrequent over the last couple of months. All right, let's take a quick short break now. We'll be right back. Don't go away. Stay with us. Its business points where we extract the Nigerian economy and the government's policies. The Naira held largely steady on Wednesday, November 5, 2025, as Nigerian official foreign exchange markets traded the US dollar near 1,430 Naira to 1,445 Naira, while parallel markets, which is black markets, dealers quoted the greenback around 1,435 Naira to 1,459 Naira parallel and black markets. Dealers buying at roughly 1,435 Naira and selling at about 1,450 Naira to 1,459 Naira to a dollar at the parallel market. Dealers buying at roughly 1,435 Naira and selling at 1,450 Naira to 1,459 Naira per dollar. Market participant says the official NAFEM remained calm after a string of policy action and steady inflow into the market this month, keeping the Naira from sharp swing. Retail cash traders on the parallel market continue to trade dollar at a premium to NAFEM, with most Lagos and Abuja dealers quoting around 1,450 Naira for sellers. Analysts link the recent relative stability to the central bank intervention and to easing inflationary pressure after a policy rate cut in September 2025. The CBN action plus some improved FX inflow have helped narrow volatility, although risk remain from fiscal pressure and external shocks. 9 top banks in Nigeria recorded a combined of 4.115 trillion Naira profit after a tax in the 9 months ended September 2025, representing a 1.5% year-on-year decline from 4.176 trillion Naira recorded in the same period of 2024. The bank are Access Holdings, Eco Transitional, GT Holdings, FBN Holdings, Sterling Holdings, Stanbic IBTC Holding, UBA, Wema Bank, and Zenith Bank. An analysis of the financial statements for the period ended September 30th, 2025 shows that 5 banks recorded profit growth, while the remaining 4 posted decline. Cumulatively, the 5 profitable banks grew by their PTA by 37% year-on-year to 1.753 trillion Naira in 9 months of 2025, up from 1.28 trillion Naira in 9 months in 2024. The gainers were Wema Bank, Sterling Holdings, EcoBank, Stanbic IBTC, and UBA. Wema Bank recorded a 299% year-on-year increase in profit to 172.4 billion Naira in 9 months in 2025, from 43.2 billion Naira in 9 months in 2024. While Sterling Holdings posted a 130% rise to 62.3 billion Naira from 27.4 billion Naira. Stanbic IBTC grew profit by 52% to 278.5 billion naira from 182.9 billion naira. And EcoBank reported a 43% increase to 702.4 billion naira from 492 billion naira. Similarly, UBA recorded a modest of 2.5% growth to 537.5 billion naira from 525.3 billion naira. Conversely, the remaining four bank assets holding, GT Holdings, FBN Holdings, and Zenith Bank, saw their combined profits dropped by 18.4% year-on-year to 2.362 trillion naira in 9 months from 2.897 trillion naira in 9 months in 2024. Assets holding posted a 2.2% decline to 448 billion naira from 458 billion naira, while Zenith Bank recorded a 7.6% drop to 764.2 billion naira from 827.3 billion naira. FBN Holdings saw an 18.4% fall to 450.9 billion naira from 533.9 billion naira, and GT Holding recorded a steep percent decline of 699.6 billion naira from 1.085 trillion naira in the corresponding period of 2024. All right, this is where we call it a wrap on Business Point today. Join me again tomorrow on Global Television, channel 365 and Start Time 276. To stay connected, kindly follow us on all our social media platforms at Global TV NG. Till I come your way again, I am Kike Lomo Okeri. I celebrate you all.